All right, guys, welcome to ICT Essentials Day 3, and today we're going to switch it up a bit from looking at the charts. I'm going to try to make this more professional, so this will be talking about our smart money technique, or our SMT, and this is something that I look for heavily in a bunch of my trading. I know a lot of people don't use it, but ever since I started using it, I've seen much more success and much more confident in my entries, so let's get into it. What exactly is SMT? SMT is a divergence between two correlated assets. In this example, one correlated asset makes a higher low while the other one makes a lower low. So you can see this one, makes a lower low while this correlated asset makes a higher low. Why is SMT important? SMT, aka smart money technique, shows the strength of a correlated asset compared to another. This helps us confirm the switch in order flow after a key liquidity level is taken. It can occur on every time frame, and it also helps us identify our true manipulation in a range-bound market. The main assets I use to trade using SMT is NQ and ES, and Ethereum and Bitcoin. However, SMT works a lot across a lot of more correlated assets such as DXY and forex pairs like Euro USD and GBP USD. You can use those for SMT, and you can also use GBP USD and Euro USD as their correlated assets as well. There are many correlated assets. It's even in the commodities market, but these are the main two that I trade. Yeah. When is SMT valid versus when it isn't? So like I said, SMT basically forms all the time. It forms in almost every single price swing. There's just certain areas in the market where the SMT is more high probability than it would be just not paying attention to the other factors. So when is it valid? At specific times, at high time frame or intermediate time frame key levels such as PD arrays, opens, maybe during a high time frame liquidity sweep, and it is also valid during high impact news. So usually when we have FOMC or we have NFP, you will almost always see SMT form between the two correlated assets in order to, and that will signify our direction or our change or switch in trend, because usually when we sweep liquidity or we turtle soup, we usually have SMT happening. And another one is below or above opening time. So 10 a.m. opening times, whatever hourly candle you want to use, daily candle, below midnight open. You can look for SMT during protraction. So usually when we're anticipating the wick of a high time frame candle, such as a daily candle, what we're going to be doing is we're going to be looking for SMT to form inside of the wick in order to confirm that we are just seeking liquidity and that we are highly likely to reverse. So when is it not valid? Not during key times or levels, so during random times, during Asia, maybe during lunch hour, or during the end of PM session, or the maybe change between change between London session to AM session, or the downtime in between, and during seek and destroy conditions when it is on both sides of the market. If I see SMT on both sides of the market, and we are just in a seek and destroy condition where we've taken out Asia highs and lows and London highs and lows, then likely SMT will form, and yes, we will reverse. But when it's on both sides of the market, I usually like to stay out. SMT happens all the time in almost every price swing. It's just about determining when and why it should happen. So we'll go on to some chart examples, and this is NQ on the 15-minute time frame, and this is ES on the 15-minute time frame. So as you can see here, this vertical line is our 10 o'clock 4-hour candle, and as we can see, we have our original consolidation around here and around here. And what we've done is NQ does not take this high, but ES does take this high. And as you can see, this is also 10 a.m. So when we have this switch between 4-hour candles and we see that ES takes this high and we are above the 10 a.m. open, which is around this area right here, this candle, this candle right here that has the long wicks on both sides where the arrow or where the vertical line is, you can see that it's above the opening time. ES takes out the high, NQ doesn't, and in order to confirm our trend switch, then we see this black down candle form once we have taken out this high. Soon after, they both displace in opposite directions, and they attack the resting liquidity that is formed right here. So this, like I said, your SMT is almost always going to form during a smart money reversal, and when we have a low time frame or high time frame market maker model. Now here's another example between Bitcoin and Ethereum daily. So in this example, we see Bitcoin making a higher low while ETH makes a lower low below the monthly open and during our third week manipulation. Notice how I'm making sure that I'm adding the time aspect and the time levels aspect below the monthly open and during our manipulation week in the monthly power of 3. So during our third week, we see that manipulation happen. It can be second or third week. And this applies to, fractal on all time frames. So maybe Tuesday, maybe during PM session, you see something like this happen, or maybe it's below the daily open. Like I said, you would like to be looking for it on all those time frames. So now some tips that I have when trading SMT is looking for SMT during hourly ranges. So when we have a low or a high created during 10 a.m., look to see if we form SMT during the 11 a.m. hourly candle and look to frame a trade off of that. This also applies to any other time frame. I just prefer looking at SMT on a high time frame and waiting for a fractal SMT to form for better confirmation. So what I mean by that is when I'm looking for a high time frame SMT to form, I'm also looking for a low time frame SMT, maybe on the 5 minute or the 1 minute to form to confirm that we are actually, going to, go in the opposite direction of what order flow has been doing. SMTs inside of PD arrays are very strong. This is something that you should look for all the time. So if NQ maybe taps into a fair value gap, but ES doesn't, then it's highly likely that we're also going to reverse there. And a lot of people that are waiting for ES to tap into that gap have not realized that NQ has already taken it and that we are going to go lower. If you are in a trade and you see SMT forming, it is highly likely that we will reverse. You're going to want to enter on SMT and exit on SMT. And at the end of the day, like for somebody like me who's taken hundreds and maybe thousands of trades over the past year, this is something that I can say with confidence. You can look at it on your own that this happens a lot. This is the reason why sometimes a trade might reverse on you, because you might enter on SMT, but you want to look to exit on SMT during key liquidity levels. So just by having one take profit is not going to be enough sometimes, and you might need to set multiple take profits and trail stop aggressively if you're trading on a lower time frame and you see low time frame SMT happen. But if we're obviously heading towards a strong form of drawn liquidity, then it's likely that you can ignore the SMT and it will just continue going up. But like I said, it always forms. It just depends on where it forms and when it forms. Like I said earlier, SMT will always form during a smart money reversal. And then once you see SMT form, wait for a change in state of delivery to confirm narrative and bias. And note, if you do not pay attention to time, SMT is pretty much useless. You need to understand that they go hand in hand and that the markets are booked based on the smart money technique, time, and price alone. This is something that occurs in almost every single price swing if you go back and look at it. And so this is a little bit of a short video. SMT isn't something that I can really go much further in depth on. This is just about the surface of SMT, and this is how I look at it. There is such things as sequential SMT that I know that Trader Day teaches, but I really don't use it all that much. And it mainly is when we're in like distribution phases to help you confirm that price is going to continue with that distribution and not change. So it's good for understanding and staying in the market, and it's a strong confirmation that price is going to head lower or higher. But this is pretty much everything that I understand about SMT. If you want a deeper kind of more in depth, I would with ICT, but I'm just trying to gear this towards beginners and help you guys kind of understand how I trade and the components that I look for. And this is why I kind of made this series to, give you guys an insight on when you see, a trade happen or a trade video. I want you guys to understand why I'm taking that trade, and you will learn a lot more. And the 3 videos that I posted in the past are basically, those components that I use. So I hope you guys enjoyed, and peace out.